Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 232 on August the 19th, 2022. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Vroom Inc, Jumia Technologies, and ChargePoint Holdings, and we discuss three new trades on Weber Inc, Revlon Inc, and Party City Holding Company. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the markets ended the week slightly lower week over week. The Dow Jones Industrial Average lost 54 points, closing at 33,706 points. The S&P 500 index lost 51 points, ending the week at 4,228 points. And now it's time for the topic of the week. The topic of the week this week is finding the right mix of trades for your portfolio. While it's great to become an expert in one specific type of trade, most people find it beneficial to use a variety of trading strategies in their portfolios. Someone asked me what the right mix of strategies would be. So I'm going to split the strategies up between value trades, income trades, and lottery trades. I look at each of these groups differently, and the mix that you will have is definitely going to be based on the size of your portfolio and your appetite for risk. So I consider value trades to be trades where I am buying something for a lower price than it should be, or selling something for a higher than it should be. These are my debit and credit spreads, where I buy the spread for less than the current intrinsic value of the spread, or I sell a spread with no intrinsic value at all. We do these trades every week here on the show, so that shouldn't be any surprise to you. And when it comes to income trades, you're typically talking about trades that allow you to collect a premium, meaning you're selling options. This can include credit spreads, but I also add in there covered calls and selling cash secured puts. The additional strategy I put in this bucket is the diagonal spread. Even though it is a net debit at the start, you will aim to sell options with regular frequency each week or each couple of weeks, which will create income for you. The final bucket is the lottery. This bucket is important because sometimes you get to win big. Much like the lottery, you can lose too, so you shouldn't overplay your hand in this bucket. I will occasionally buy a strangle on the market when it's super volatile. You can also sell a ratio spread, selling one and buying two. In both of these examples, you might end up owning an out-of-the-money option that moves into the money, leaving you with a lottery ticket option that puts a load of money into your bank account. This is truly how I look at trading. I want to have a few trades from each style in my portfolio. So I'm curious how you guys trade. Do you use a mix of strategies or do you focus on just one? What mix of strategies do you use? Shoot me an email and let me know. I'm curious. So let's get into the trade review from last week. And as a spoiler alert, this was not a good week. It was 3 for 3 as a loss. So we'll start off with our covered call on Vroom Inc, symbol V as in Victor, R as in Romeo, M as in Mike. At the time, the stock was trading for $2.12. We looked at buying stock and selling the September 2.5 call at 25 cents, which could give us a return of 29.72% in 5 weeks. Well, shares of Vroom lost 28 cents, ending the week at $1.84 per share. The call spread we sold lost 10 cents, leaving us with an 18-cent net loss on the week if we were to close the position. Now, I'm more of a fan of rolling the strike lower. We can buy back the 2.5 call and sell the $2 call at 20 cents, which would leave us with a net gain of 2 cents overall. The main gain, of course, would come from any future gain in the stock if it moves from $1.84 to the $2 strike. That would still be a possible 8% gain on the trade if the stock rallies back to $2. So this trade definitely was a loss on the week, but we can nullify that by rolling the strike lower, which was what we typically do on these covered call situations if we have time. Next up was a credit spread. We looked at Jumia Technologies, symbol J as in Juliet, M as in Mike, I as in India, A as in Alpha. At the time, the stock was trading for $9.56 per share. We looked at selling the September 9/8 put spread at 33 cents, which could give us a maximum possible loss of 67 cents. Jumia Technologies stock fell $1.78, ending the week at $7.78 per share. The out-of-the-money put spread we sold is now in the money. The spread gained 42 cents of value, leaving us with a net loss on the week. So we are 90 cents below our break-even price, which means I must start with the fact that it's perfectly fine to close the trade, take a loss, and move on. However, we still have a lot of time left before expiration, 4 more weeks. So I'd like to wait at least a few more days to see if stock looks like it's going to reverse back higher. If stock does remain lower, you could take the 42-cent loss and then look to sell a call spread and a put spread combination that would return some portion of that loss to your account. Now, I don't want to hedge out the risk of this trade too soon, so I'm willing to be just a little bit more patient. We have 4 weeks until expiration, so I'll let this one breathe a little bit. I don't want to lock in that loss until I'm certain that stock is not going to reverse back higher. And our final trade from last week was the debit spread. We looked at ChargePoint Holdings, symbol C as in Charlie, H as in Hotel, P as in Papa, T as in Tango. Now, at the time, the stock was trading for $18.87 per share. I looked at buying the September 17/18 call spread for 63 cents, which could give us a maximum possible gain of 37 cents, or that's a 58.73% return. Now, ChargePoint stock fell $3.84, closing the week at $15.03 per share. The in-the-money call spread we bought is now out of the money, giving us our third loss on the week. Now, as we know, there's plenty of time left on these trades, so we don't have to make any immediate adjustments. It's good to have an idea of what can work to mitigate additional loss, besides just closing the trades. So when you're long a call spread, don't just look at selling a put spread. In fact, don't sell a put spread at all. Those are both trades that benefit from a rising market, and the current prices in this market are heading lower, which would mean more losses. Now, if stock remains lower, you can buy back the 18 call and sell the 16 call, which would allow us to collect 48 cents right now and turn this long spread into a short call spread. You could also sell the 16-17 call spread, which would turn this spread into a short butterfly spread and lower our risk. So either way, you have some solid options on how to adjust this trade and possibly still make a profit. If you don't understand option trading well enough to make these sorts of adjustments or to even see the possibilities, you should consider joining my option trading coaching program or a mastermind. Just email me for more information. The calls are a lot of fun, and you'll get better at finding trades and adjusting trades with every phone call. That's it for the trade review from last week's trades. Today, of course, August the 19th, was options expiration for all August monthly options. We will focus on September 16th expiration for trades on the show over the next few weeks. So we're going to start off with our covered call on Weber Inc., symbol W as in whiskey, E as in echo, B as in Bravo, R as in Romeo. The stock ended the week at $8.85 per share. I'm looking at buying stock and selling the September 10 call at $1.35, which could give us a return of 28.25% in 4 weeks. You enter this trade by buying stock for $8.85 per share and selling the September 10 call at $1.35. This trade makes the most money if stock finishes above $10 per share. The break-even price on this trade is $7.50 per share, and in real terms, the stock purchase will require $885, and you'll collect $135 for selling the option. Next up, we have the credit spread on Revlon Inc., symbol R as in Romeo, E as in Echo, V as in Victor. The stock ended the week at $8.49 per share. I'm looking at selling the September 7/6 put spread at 35 cents, which could give us a maximum possible loss of 65 cents per spread. Now you enter this trade by selling the September 7 put at $1.35 and concurrently buying the September 6 put for $1. This is the credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $7 per share. The break-even price on this trade is $6.65 per share, and in real terms, you'll collect $35 per spread that you sell and have $65 at risk. And our final trade on the week is a debit spread looked at Party City Holding, symbol P as in Papa, R as in Romeo, T as in Tango, Y as in Yankee. The stock ended the week at $2.06. I'm looking at buying the September 1/2 $2 call spread for 30 cents, which could give us a maximum gain of 20 cents, or that's a 66.67% return in 4 weeks. Now you enter this trade by buying the September 1/2 call for 80 cents and concurrently selling the September 2 call at 50 cents. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $2 per share. The break-even price is $1.80 per share, and in real terms, you'll pay $30 to enter the spread, and your maximum gain is $20 per spread. So that's it for this week's show. Thank you guys so much for following along with me, listening to the show, and I am simply blown away by, number one, having so many episodes, 232. When you start a podcast off and you agree to do it weekly, you never imagine that it's going to end up in the 200s or even the 100s. So it's been fun to make the show every week. It's actually made me a far better trader. And I know some of you email me. It's made you better traders too, which is awesome. So thank you for the emails. Thank you guys for listening. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.